Assalamualaikum and a very good day. So my name is Safiyya. I am the group leader for group 10. So my group and I will be presenting about Dunkin's group brand. So this will also be presented by myself, Safiyya Balkis, Aunia Kartasela, Ainur Rahma, Haziq Hanif, Marfu Atul Izzah, and lastly Alia Atlasia.
Hello, my name is Safiyya Pakpahan and I would like to introduce you about the Dunkin' Donuts. So Dunkin' Donuts founded in 1950 by Bill Rosenberg in Quincy, Massachusetts, and is leading a global coffee and baked goods chains, and a company known for its wide range variety of donuts, bagels, and beverage. And the company emphasizes the convenience and innovation, for example, like offering drive-thru services and mobile ordering and loyalty program. In 2020, Dunkin' Donuts, along with its sisters Baskin Robbins, became a part of inspired brands, marking the chapter for the growth and evolution.
Assalamualaikum and good evening. So my name is Muhammad Haziq. I'm going to continue with the vision and mission of the company Dunkin Donuts. So the vision of the company, which is Dunkin Donuts, is to be recognized as a company that responsible serves our guests, franchise employees, communities, business partner, and the interests of our planet. So for the mission is Dunkin mission statement is also given on the corporate website, but it is titled Our Priorities. So the statement has 4 parts, which is our people, our guests, our neighborhoods, and our planet.
So hello everyone, my name is Marfu Atul Izzah, and here I will explain about IE metrics or internal external assessment. So IE metrics basically used for strategic planning tool that can help organizations to assess the competitive positions by evaluating their IFE and also EFE. So before we go to the IE metrics result, I want to show you the IFE metrics result. It resulted on 2.5 weight score, which indicates that Dunkin Donuts have a slightly above the average. Dunkin Donuts need to improve their internal strength and address the weaknesses that they must improve. While for the EFE metrics, it resulted at 2.72 weight scores, which indicates that slightly above the average. So Dunkin Donuts maybe can more see the opportunities and also try to mitigate any threats that will affect the firm. Now let's talk about IE metric. There are 2 figures here. The first one indicates the IE metrics result, which is the vertical IFE metrics, and the horizontal is for the EFE metrics. The second figure is the table that indicates the data used and resulting in the first figure. Let's focus on the figure in IE metrics. There are 4 dots there. The first one, red color, which for the Dunkin Donuts in US, and purple is for Baskin Robbins in the US. It resulted that it's on grow and build quadrant. The blue one is for Baskin Robbins International, and the green one is for the Dunkin Donuts International. Reveals that is positioned in the hold maintain quadrant. From the IE metrics result, we can know that the company has excellent internal strengths by seeing the IFE scores, while the EFE scores reveals that the company need to address some external factors to further improve its performance. And here we provide the CPM assessment or competitive profile metrics, which indicates that Dunkin's have more competitive strength rather than Krispy Kreme. But Dunkin Donuts has less competitive strength compared to Starbucks.
Me back, Haziq. Going to continue with the SWOT analysis. So the first one is the strength politic strategies. As we know that the first one is the expand the brand into the markets. Provide international markets with friendly food options, offer loyalty and rewards program, boost the revenue with offering new flavor. And then the second one is the strength, weakness opportunity strategy. So first one is provide healthy food option, strengthen the diversity in organization leadership, boost the growth potential in international markets. So for the third one is the strength strategies. The first one is enhance the loyalty and reward program, enhance product variety and distinctness of Dunkin Donuts, enhance by highlighting the special range, increase the price of coffee in store. So the last one is the weakness threat strategies. So the first one is increase product differentiation in Dunkin Donuts, increase the international market share, strengthen the quality control measure within franchise location. The last but not least is the invest in marketing and brand building initiative to reinforce brand loyalty. So that's all from me. Thank you very much.
So I will be discussing our strategic recommendations for Dunkin' Donuts, focusing on growth and aggressive growth strategies based on BCG metrics analysis. So for Dunkin' Donut US, it's in the cash cow, which is holding a dominant position with high market share in a mature market. So here we should focus on maintaining a market position and optimizing operations to maximize their profitability. So stable cash flow generated should fund investment in higher growth areas here. So next is Dunkin' Donuts International, which is question mark, with a significant growth potential, but currently they are low market share. So we recommend a heavy investment in marketing, like store expansion and also product innovation. It is to increase like the market presence and transform this division into a star. So now let's talk about Baskin-Robbins US. So it is classified as a dog with low market share and a very stagnant market. So our strategy should be to reduce operational costs and explore niche markets, and also consider like divestiture if improvements are like realized. So lastly, Baskin-Robbins International is also a question mark, showing a strong growth potential. Strategic investment in high growth regions and local partnerships are crucial. This is to increase market share and turning this division into a star. So Dunkin' also needs to adjust strategies based on their market feedback and also performance metrics. So these recommendations will ensure that they leverage their strengths, address their weakness, and also capitalize on growth opportunities. So that is all for BCG metrics.
Assalamualaikum warahmatullahi wabarakatuh. My name is Ainur Rahma and I would like to present the 5 key recommendations to drive Dunkin' growth and market position. So the first one, we propose innovating our breakfast menu. By introducing healthier options and premium coffee blends, we aim to increase breakfast sales by 15% over the next 3 years. And this initiative will require investment of $13 million but will position us as a leader in the competitive morning market. And then second, we need to enhance our digital capabilities. This involves collaborating with the delivery services and developing a robust mobile apps. With a 23 million investment over 2 years, our goal is to achieve 20% of sales through digital channels, meeting the growing demand for convenience. And then third, we will focus on enhancing our on-the-go services by expanding drive-through and implementing curbside pickup. We are targeting a 24 increases in on-the-go sales, and this strategy directly responds to changing customer behaviors post-pandemic. And then fourth, we will invest in the brand marketing by launching campaigns that promote our healthy option and diverse product range. We aim to increase customer traffic during breakfast hours by 30%, and this will strengthen our brand position and attract health-conscious consumers. So lastly, we will focus on international expansion. We will target high-growth markets like China and India, and with the objective of opening 600 new international locations. And the strategy will diversify our revenue streams and tap into rapidly growing economies. So these recommendations are designed to innovate our offerings, improve our digital presence, enhance convenience, strengthen our brands, and expand our global footprint. And by implementing these strategies, we position Dunkin' for sustained growth and increased market share in the competitive fast food landscape.
Good afternoon, everyone. My name is Safiyya and today I'll briefly walk you through our projected financial statement analysis for 2015 to 2017. Starting with our income statement, we are forecasting substantial growth. Revenue is expected to increase from about $100,000 in 2015 to nearly $969,000 by 2017. This growth is driven by our planned marketing campaigns and new product launches. Simultaneously, we are implementing our quality management initiative, and which should decrease our operating expenses, and our net income should boost from roughly $581,000 to $756,000 over this period. These net earnings will directly impact our balance sheets, being added to our retained earnings each year, and this cumulative effect will significantly strengthen our equity positions. Looking at other key areas of our balance sheets, we are anticipate our long-term debt to increase, reaching approximately $6.56 million by 2017. To manage this, we are planning to develop a comprehensive debt management strategy in quarter 2 of 2016. Our investment in property, plant, and equipment is set to double, reflecting our expansion plans. We will be conducting an asset utilization review in quadrant 3 of 2015 to ensure we are maximizing returns on these investments. Lastly, our cash and equivalents are projected to grow substantially. We will be exploring opportunities to reinvest this excess cash into high return projects to drive through global growth. Thank you for your attention.
Hello, my name is Alata Sipakpan and I would like to present about the EPS EBIT analysis. So based on the data provided, we can conclude that the common stock financing shows a higher EPS in all scenarios, making it potentially more attractive for shareholders who are primarily concerned with the earning per share, while the debt financing, although incurring interest expenses, provided tax shield which make it competitive in terms of EPS. It shows that it avoids a share dilution, maintaining higher ownership percentages for existing shareholders.
So, to conclude, our strategic management review focuses on 4 key areas: intensifying market penetration, exploring new geographic region, introducing new menu items, and expanding into related food and beverage categories. Our financial outlook is positive with our income statement, balance sheet, and ratio analysis indicating financial stability and growth potential. So our overall goal is to align Dunkin's brand strengthen with the market opportunities, and by addressing our weaknesses and capitalizing on these opportunities, we aim to strengthen our market position and ensure a positive future for Dunkin brands. So that's all from our group. Thank you for the attention. Wassalamualaikum warahmatullahi wabarakatuh.